Hi everyone, it's Grace. Welcome back to my channel. Yesterday was one of the most important dates out of the third quarter of 2022 and possibly throughout the year, because that was the September FOMC meeting, and the Fed decided to raise another jumbo rate hike, so 75 basis points. And when we're looking back from March 2022, the Fed funds rate is already up 3%. So right now, the effective Fed funds rate is at 3.08%. And that is a super big deal. So when you're taking a look at the 30-year fixed mortgage rate, right, on Freddie Mac, it's already at 6.29%. So there's definitely a lot of things going on in the housing market. So in today's video, I put the title very clearly. Do you think that the Fed is crashing the housing market? I think that's probably the case right now. In the last video, I provided you with a quick analysis of the 3 opportunities as well as risk in the 2022 recessionary period. So right now, we're already like midway in the recession. So I'm gonna also provide a lot of like updates for the July and also August inventory change as well as the pricing change, both from the Zelle website. So before we begin today's video, remember to subscribe to my channel and click on the bell button so you get notified immediately when new videos are uploaded. Also, feel free to give this video a thumbs up if I find it useful. Another way to support my channel is by donating any amount that you feel comfortable with, either through PayPal, Cash App, Zelle, or QuickPay. And I'll provide the links in the link tree down below. Thank you so much for your support for my channel, and let's get started. So when we're looking at the Fed funds rate, it's now at 3.08%. It's not updated on this website just yet. But when we compare to 2019, you can clearly see that it was at almost the same level. So this is the neutral zone. So when the September jumbo rate hike of another 75 basis point, we're already above that zone. So Powell says that we're in a reasonably restrictive zone. And then there's also another 2 FOMC meeting for the rest of 2022. So we're definitely going to be around 4%. And just from a Fed funds rate perspective, it's really restrictive. When we're heading to the Freddie Mac website, we can see that the fixed year mortgage rate and also the adjustable mortgage rates are shooting up like crazy. So for example, the 30-year fixed rate is one of the most commonly used mortgage rate that people use. For example, they put 20% down and the structure allows them to do an affordable monthly payment, right? So right now you're seeing that it's already at 6.29% and it's really restrictive. So when you compare to a year ago, I would say probably exactly a year ago as September 23rd, 2021, the 30-year fixed mortgage rate was only at 2.88%. So that was like the lowest mortgage rate. So now it's more than doubled. And just think about like how many buyers are pushed out of the market. And that has a huge impact on the correction of the housing price. So we're going to see that immediate effect for both the pricing change and also the inventory change. So now let's quickly look at the inventory change from June to all the way to August, right? So you're looking at 3 months different data. And then this one is for June. So at that time, we know that the inventory is really picking up starting on the West Coast and some of the Rocky Mountains areas. Right, so now we're heading to July and you're seeing that these colors are becoming much darker in the brown tone. And then when we're looking at the August, you're seeing that a lot of the areas that used to be in the neutral color, like either light blue or light yellow, now it becomes a little bit darker in a yellow tone and brown tone. And you can clearly see that these areas are turning darker, and then some of the areas in Texas and also a lot of the areas in Florida are also turning, like generally it's turning from the blue tone to the yellow tone. So that means I would say that the jumbo rate hike, the 375 basis point rate hike has a lot of impact on the inventory change. And then let's go over to the pricing change map, right? So this is for June 2021 to 22. So you're seeing that the bulk of the metro areas are in the green tone. And then when we're switching to the July map, some of these areas in the West Coast, they're actually turning into the neutral white color or into the orange color. And then for August, you can clearly see that some of these areas are clearly turning into a different tone. So that tells you that these areas are actually having an immediate housing correction. And just from a month-to-month standpoint, that is a huge price drop in the listing price. So that is a very warning sign. So today we're gonna take a look at some of the areas in the August map. So I'm just gonna point out a couple of major metro areas that are literally having a housing correction now. So if you're looking from a month-to-month basis, we can see that it's a housing correction. But if we're looking at a year-over-year basis, it could potentially go into a housing crash category. All right, so now we're going to compare these two maps side by side and take a look at the August, mainly the August situation. And then I'm going to switch between the July and also the August map just to tell you what is the pricing difference. All right, so the first city that we're looking at is the Seattle area, right? So for the inventory change, you can tell that from last August to this August, the inventory picks up by 22%. So about 2,000 more properties are hitting the market. You can tell like it has an immediate impact on how many people are willing to sell their properties right now. And then when you're looking at the price, so this is the August price, right? It's around 767K. And then when you're looking at the July, you're seeing that the price is actually a little bit higher at 774K. So just to round it up a little bit, on a month-to-month basis, it's actually dropping by $10,000. And this is a clear housing correction. So when you're looking at a year-over-year basis, it's actually 120,000 price drop. So that, can you call it a housing crash? I think so, because this is the August situation, right? So when you're looking at September, October, the month-to-month price drop is going to be more than $10,000. So if on a year-over-year basis, it hits the 20% mark, it's definitely a housing crash. So Seattle is definitely one of the metro areas that you do not want to buy a house right now. It's literally having a housing crash. And it's going to get worse as we see higher Fed funds rate, right? Just be very cautious about that one. And then the second market that we're looking at is the Portland, Vancouver, and Hillsborough in the Oregon area, right? So you're seeing that the inventory change is only picking up by a little bit, right? By 1%. But when you're looking at the year-over-year change in the price, so this one is for July, and it's priced at 579K. And then when you're looking at the August situation, it's at 571K. So each month is decreasing by $8,000. So when we're looking at a year-over-year base, like in 12 months, it's going to decrease by about $100,000. So that is definitely also a housing correction. And it's gonna, like, these price drop by each month is gonna increase as the Fed funds rate goes even higher. Next up, we have Boise City, Idaho. This is also one of the areas that's like super overvalued since the pandemic began. So when we're looking at the year-over-year change in inventory, it's really picking up by 37%, and that's a huge deal, right? So about 1,000 more inventories are hitting the market. Just think about like how many sellers are kind of desperate to get rid of the properties right now, and that's a very telling sign. And when we're switching towards the housing situation, the price. So this is for July, and it's priced at 510K, right? And then when we're looking at the August price, it's dropping to 502K. So that's also another $8,000 per month drop and a close to 100K price drop on a 12-month basis. So Boise City is actually very similar to Portland, Oregon. All right. I don't know how you guys feel, but this is kind of creating a panic sell among property owners in this area, and it's only going to get worse. I know there's a lot of pain right now, but this kind of housing correction is really a direct result of the jumbo rate hike. So I hope that the Fed knows what it's doing right now, because the housing market is reacted like really, really quickly to these jumbo rate hikes. Right. And another interesting thing that you can see is that when you're looking at the inventory year-over-year change, the majority of these areas are actually already in the brown tone. So the inventories are picking up really quickly. And then when you're looking at the price map, the only area that's displaying in the darker red tone is actually Boise City. So it's going to take a little bit of time for these neighboring areas to drop in price as well. All right, for the folks in the California area, this is one of the states that's absolutely slashed for the past few months. So I cannot emphasize this enough, but the housing correction or crash actually started in many of the metro areas in California. For example, we're looking at San Francisco, Riverside, Bakersfield, and also San Jose area. So you're clearly seeing that on the inventory map, a lot of these areas are already displaying in the yellow or brown tone, right? And then when we're switching to the price map, this is for July, and then this is for August. Just see how much the color changes just based on that. So for example, we're looking at the San Francisco, Oakland, and Berkeley area. The inventory is only picking up by 6%. That's not really like that big compared to Seattle or Portland, right? But when you're looking at the price, it's actually a big deal, right? So when we're looking at the July price, it's at $1,451,000. Then when we're looking at the August price, it's already dropping to $1,422,000. So I know that they're still in the 1.4 million category, but when you're looking at the month-to-month change, it's actually dropping by $36,000. So when you're calculating into a 12-month basis, it's actually dropping by $360,000. So I don't know, if you bought a house in California like at the beginning of this year or last year, I don't know what's happening right now, because this is clearly a housing crash. So for those of you who already bought the house in this time period, did you remorse? Did you regret your purchase? The interesting thing is that San Francisco is not even the area with the biggest housing crash, right? So from these two maps alone, we can see that the San Jose, Sunnyvale, and Santa Clara area is the area that crashes the most. So let's do a quick calculation to see how much it actually crashed, right? So for the inventory change, it didn't really change much, to be honest. And this is very strange. And then when we're looking at the price for July, it's priced at $1.6 million. All right. So let's plug in the numbers first. And then let's deduct for the August price, right? So it's at $1.5 million. So you can clearly see that the price drop is about like $50,000 per month. This is per month, not even per year. So that is crazy. All right, so you can clearly see that this is close to 50,000. So if we're multiplying this by 12 months, that is close to $600,000 drop in price. Just think about like how much the price is dropping because of this housing crash created by the Fed. And I don't know, if you're in San Jose right now, if you already bought a house, you're losing a lot of value, like pure equity value, right? In this type of market. The Southern California area is also no exception. So you're seeing that because this is on a year-over-year base from last August to this August, so it's still in a green tone. But you can clearly see that the green tone is actually turning a lot more lighter. So that means Also paired up with the inventory change, that means there is a clear housing correction right now. For example, in the LA area, for the July housing price, it's at 928K. And then when you're going to the August price, right, it's at 914K. So there is a $14,000 price drop per month. And then when you're looking at the year-over-year price drop, it's close to $150,000, and that's also a lot. So I would definitely say that, like, as of September 2022, we're at the peak point of the start of the housing crash already. And it starts from the West Coast, some of the Rocky Mountains, and subsequently we're also seeing a lot of the traditional metro areas are also starting this housing correction and crash. All right, now we're going to head over to Denver, Colorado, and this is also one of the major metro areas that's having a housing correction right now. All right, so you're seeing that on the year-over-year change in the inventory is actually increasing by 13%. So that's also a significant increase of the inventory. More properties are hitting the market, and sellers are also getting into that panic mode. All right, so we head over to the price map, and then as of July, it's at $36,000. And then when we're looking at the August price, right, it's dropping to $629,000. So we're also going to do a quick calculation to see how much is the price drop. Right. All right, so it's dropping for about $6,500. So we're going to also multiply by 12, and that gives you a close to $80,000 price drop on a year-over-year basis. So from this August to next August, it's going to drop by $80,000. So that's how you kind of get an idea of how much crash is going to be. But we know for a fact that the Fed funds rate is going to be more than 4% by this December, and it's really, really bad news. The price drop on a 12 months basis is definitely going to be more than $80,000. So now I would definitely say a word of caution. If you purchased by 20% down at the beginning of 2022 in any of these markets, right, in any of the cities that we mentioned specifically today, you're not in a good financial situation because the housing price is going to drop more than 20% in any of these areas, because 20% is what defines a housing crash. So in this type of situation, you really have to consider like what is the best move next, because the environment is really contractionary right now. And then we can clearly see what the Fed wants to do. A good thing about Chair Powell is that his actions is very predictable, right? The first thing that the Federal Reserve needs to do is to bring down inflation, because right now it's still very sticky. So the Fed will not hesitate to bring the Fed funds rate into a more restrictive level, right? So just think about how to plan ahead for the next 6 to 12 months. Definitely look at your household balance sheet a little bit better to keep liquidity, and also just to understand how you can protect yourself through this recessionary environment. So the East Coast is a little bit better than the West Coast because we're not seeing this type of like spreading housing correction and crash. But I'm just going to mention a couple of metro areas that deserve your attention as well. So one of these areas is the Washington, Arlington, and Alexandria area, right? So the inventory is actually decreasing when you're looking at it on a year-over-year basis. It's decreasing by 19%. However, you're also seeing that the housing correction is starting. So in July, the price is at $553K. And then when we're looking at the August price is at 552K. So the decrease is not really that big. It's only $1,000 price correction. And then if you translate it 12 months later, it's only going to be like $12,000 correction. So you can clearly see that price correction is significantly smaller compared to like the West Coast, right? And also some of the Rocky Mountains area. So this is very interesting, and you need to clearly understand these subtle differences. So another area is the Pittsburgh area in Pennsylvania. So the inventory is actually decreasing by 11% as of August. And then when you're looking at the price correction, it's in a very, very small increment. So in July, as of this year, it's actually close to 212K. And then to August, you're seeing that it's like decreasing a little bit, right? Close to 211K. So that price change is like very, very small. It's like even smaller than Washington area. So that is one area that you're seeing that, the price drop is kicking in a little bit more, but it's significantly smaller than the other areas, right? So if you purchased a home as a primary residence, for a little bit more down, I don't think there's a big worry in this area. And this actually relates to one of the most nimble strategies when it comes to the housing market, right? So say if you already purchased something at the beginning of this year or at the end of last year, you know that there is a pricing correction or crash coming. However, by doing these type of calculations for, I would say from 2022 to 24, you can actually predict, for example, if it's going to be a 5% crash in a 2-year period or a 10% crash in a 2-year period. Is it within your budget? Can you stand it? If you can stand it, that means you can be more resilient in this recession and not lose your home to a foreclosure. So that is also one of the most nimble strategies that you can adopt. So definitely take a good look at your household balance sheet right now. Understand how much liabilities you have compared to your total assets, and also assess your employment situation a little bit better. Understand that you need to have that monthly cash flow coming in every month to support yourself and also your family. So the last area that I would focus a little bit more is Florida, right? And when you're looking at the inventory change from July to August, you can see that, the color change is really, really quick. So that jumbo rate hike, it really does have a very negative impact, especially on the increase of the inventory. But when you're looking at the price change, a lot of these areas are still increasing in price, and not one area is dropping right now. So this means that Florida is a little bit more resilient. You can clearly see that there is a clear difference between Florida and California or Washington and Oregon, right? But as we go deeper into the recession, especially when the Fed funds rate goes above 4%, 5%, right? In that zone, that correction will also kick in. So, this type of housing correction is definitely going to happen, and we're going to update on a month-to-month basis, so you can see the inventory change as well as the price change, and definitely stay on top of it. All right, so today I provided you with a quick analysis and take a look at the July to August year-over-year change in the inventory as well as the housing price. As usual, these maps will be published on my Tableau website and also my Wix site, so you can definitely take a closer look at it by yourself by hovering over any of these metro areas. They're going to be very, very helpful for you, whatever your position is. You need to adopt the right strategy and understand what is the position that the Fed is holding right now, because it is the fortune god, and we are in a, I would say reasonably restrictive. I would say quickly restrictive, right? Because think about it, 3 jumbo 75 basis point is a huge deal. All right. So thank you so much for watching today's video, and I'll see you on the next one.